me bring Aaron into the conversation for one second, Alicia. I want to come back to you. But Aaron, I want to point out, of course, you've been cautious on the show. So what are the key indicators that investors should be mindful of as we try to navigate the next few months?
Yeah, so Charles, normally I'd be talking about all sorts of equity indicators, but since inflation and interest rate hikes are really at the forefront and probably one of the biggest drivers, longer-term drivers in the equity markets, I actually think equity investors should look at fixed income yields. And so I look at the 2-year, the 10-year, and the 30-year and see what they're doing. And that gives me a sense of what's going to happen in the near term, what sort of is the general risk gauge, that's sort of the 10-year. And then the 30-year, what do we really think the economy is going to be doing long term? And that 2-year is important. It's up to 70 bips, so 0.7%. So yeah, I agree that crossing over 1% could really add a little more volatility. The 10-year is still coming down. That means that people are buying it, so the yield is coming down. The prices are being pushed up, so we're still in a bit of a risk-off scenario. But the 30-year has also started to come down, so that looks like this inflation is somewhat transitory. So I think you've got to be looking at all of them to actually help you understand the equity markets.
All right. So yeah, the movie was a cautionary tale about the arms race. This whole thing going digital, people laugh at me, Aaron, when I tell them I still get a paper check. I do everything old school, okay? When the whole digital world goes down, I'm going to be the only one with records. But in the meantime, you both are cautious. A stock like Amazon, for instance, Aaron, what would that fit in your portfolio? I can't imagine any long-term portfolio not having something that's so consequential to the entire country.
Yeah, I think that, when we're looking at these data providers, these cloud service providers, one survey said that about 70% of them had outages in the past 3 years. And almost 80% of it was user error, was human error. But I think these services, they're really going to have to accept that they are almost like a utility. They're like your telephone and your electricity, and they need to have those backups and those redundancies built in to really grow their business, because this is going to be a bigger concern for all these companies. Trust me, Disney is yelling at AWS. So I think that these are still very viable companies, good stocks to invest in. I don't see people moving away from it. It's just that they're going to have to add in more backups.
There's no doubt about it. When the McDonald's kiosk isn't working, you're in trouble.